Hi, I'm Stan the Annuity Man, America's annuity agent, licensed in all 50 states, including the one that you're sitting in. Glad you joined me. Today's topic's a good one. How renewal rates are the secret sauce, the secret formula, the secret to fixed indexed annuities. I'm going to go through all of that. I'm going to reveal the secret, which is always a good tease to get you to stay around. So stay around, listen to the music now. All right, so let's do a little history lesson on fixed index annuities, the hottest selling product out there in the annuity world. I don't know why. I guess it's a good story, but the problem is the story that's being told out there is not all true. Index annuities were developed and introduced in 1995 as a CD type product. It's going to compete with CD returns. And guess what? Spoiler alert, that's exactly the returns that have been produced by indexed annuities. And that's a good thing. Indexed annuities are not securities. They are fixed annuities that are regulated at the state level. In order to sell indexed annuities, all you need is a state life insurance license, and I think you need to pass it by scoring a 70. I mean, that's it. That's the bar to sell them. That doesn't mean it's good or bad. It's just with securities, the securities license, which I've done that in the past with Dean Witter, Morgan Stanley, Payne Weber, and UBS, it takes a lot of licenses, and it's really kind of tough to get your license to do that. Now, but with indexed annuities, it's a fixed annuity. Good or bad, whatever. But one of the things about indexed annuities that's confusing to people are what's called the caps and the spreads and the participation rates. With indexed annuities, the accumulation value, the gains of the policy, is typically calculated using call options. Call options meaning, in English, you're betting on the markets to go north. And with call options, that's what that is. Put option is you're betting it to go here, but with indexed annuities, call options, you're betting it to go north. The markets to go up. And when index annuities were first introduced, the S&P 500 was typically the index that was used to calculate the gains. But here's the catch. With indexed annuities, the dividends are never part of the return scenario. So in essence, you're taking a snapshot with indexed annuities from the contract anniversary date to next year's contract anniversary date, and then there's limitations, cap spreads, participation rates, whatever, on those gains. But that's not how it's sold. Now, in the S&P index example, historically over 50% of the returns of the S&P index have been dividend-based. But with indexed annuities, dividends are not included. It's just a snapshot from where the S&P was here on this contract anniversary date to here. And then the limitations, all of the participation rates, caps, and spreads, which leads to the topic of today. I know it took a while to get here, but it's complex. Now, with indexed annuities, that call option, and typically it's a 1-year call option, but there are some indexed annuities with 2 and 3 and 4-year call options, but most are 1 year. That 1-year call option and the spreads, caps, and participation rates, i.e. limitations to the gains, those can be changed annually at the carrier's discretion without talking to you and without talking to me, Stan the Annuity Man, America's annuity agent. So I always tell people, when you buy a 10-year indexed annuity and you're buying it for the gains, you're buying it for the accumulation value, in essence, you're buying a 10-year surrender charge product with a 1-year guarantee. That 1-year guarantee is that cap, spread, participation rate, whatever it is, on that index call option for that year, which leads to the secret sauce, the secret formula, the secret to indexed annuities and how to, buy them properly or do your due diligence. It's all in the renewal rates. And what are the renewal rates? That's when the annuity company gets to decide at their discretion without talking to you or me, Stan the Annuity Man, America's annuity agent, on what next year's option strategies will be and what the caps and spreads and participation rates will be. They get to decide. Now, that's where the rubber meets the road with indexed annuities. Some companies, some carriers have a very good record of being very fair to their customers with renewal rates and either renewing at the same rate that you first got in or a higher rate. But there are some companies out there that have what I call teaser rates. That first year is really high, like high on the cap, high, and then the next year it goes really low. And you're like, wait a minute, hold on. I based my decision on this 10-year indexed annuity on these rates that first year, and now second year, they're sticking it to me. It happens. Unfortunately, it happens. Not all the time is it some nefarious person or persons at the indexed annuity company that's doing that to you. A lot of times it has to do with the current environment of buying the options, interest rates, etc. But when you come to me, and I got a call the other day, a guy said, Stan, I know that you're not a huge fan of the accumulation value and you use indexed annuities primarily as a delivery system for income riders. And I said, you're exactly right. We do that, income rider guarantees for future income. He said, but I want to buy one just for the accumulation value, and I want to make sure that the renewal rates, the company's going to be fair. Now, been doing this a long time, have a great staff, top staff out there. And we do know the carriers that have been fair or that have been historically fair on their renewal rates, and we will share that with you. That doesn't mean that it's guaranteed they're going to be, but they have been, and typically they are. So there are some companies out there that are very fair on their caps and spreads and participation rates when they go to the renewal rates. Because every single year with your indexed annuity, remember, an indexed annuity is a fixed annuity, but these options, contract anniversary date to contract anniversary date, whatever those gains are, they lock in permanently. So the hope is you're stair-stepping and locking in gains over time. So every year you're getting a little bit, and the next year starting at that locked-in gain amount. Okay? Sounds great. It's a great chart to look at, if it all works perfectly. Here's kind of the benefit of an indexed annuity. All right, so you lock in this rate this year, and then you lock in this rate next year, and then the market goes in the toilet. You're still here. You're still at that level. You don't go down because it's a fixed annuity and that gain has been locked in. But what I want to make sure of, what my team wants to make sure of, is that the renewal rate history is in your favor so that it can continually have the potential to lock in. Now, that goes a little bit against the grain about how I look at annuities. You own it for what it will do, not what it might do, and the will do are the contractual guarantees. But if you go into an indexed annuity strategy just looking at accumulation value, and you understand that we're buying it primarily for the principal protection, and you also understand that you're going to get CD type returns, and if 1 year is a little bit more, great, but over time and over the life of the policy, blended returns will be CD type returns, then fantastic. But understand the renewal rates play a very, very big role with indexed annuities. One more thing, never make a decision to buy an indexed annuity on some upfront bonus that's being offered by the annuity company. There's 100 pennies in the dollar. They're not giving away free money. Nobody's waking up in the morning at the indexed annuity company going, you know what? I want to give away free money today, and I'm going to have to do it in an upfront bonus. No. If you believe that, you're the rube at the table. You're the sucker. Don't be the sucker. The 10% or 12% or 8% or 5% upfront bonus, great, but it's all part of the overall contractual guarantee. Who cares, right? I mean, it is what it is. There's 100 pennies in the dollar. So all of these shiny things that people talk about with indexed annuities, if it sounds too good to be true, it is every single time, right? Nod your head. So don't be swayed by that. If you're buying an indexed annuity for accumulation value, buy it for the renewal rate history of the issuing carrier. Do me one big favor. Go to my site, theannuityman.com, and sign up for my fixed index annuity owner's manual. You have to have this before you make any decision. I mean, I strip it all down. It's good, the bad, the benefits, the limitations. So do that and join me on the next Stan the Annuity Man video.